Good morning, everyone, and thank you for joining us on Morning Markets from True Potential. Today, I'm joined by Kevin Kidney, one of our investment directors, who you'll have seen yesterday talking about the real changes that we were expecting coming through yesterday in terms of Federal Reserve, what was happening in China. And maybe if we turn to the US first, Kevin, could you maybe give us some thoughts on what we heard from the Federal Reserve last night and the policy direction that they're taking?
Yes, good morning, Jeff. I think the overriding statement from the Fed yesterday was the economy remains in a good place and that the jobs market remains unusually strong. So that allowed the Fed to raise interest rates by around 0.25 percentage points yesterday. But more importantly, on the back of that confidence about the economy, they raised their expectations for interest rates for the rest of the year by 1 percentage point. So that really translates into expectations for interest rate increases through the rest of the year on the back of that economic strength.
And do you think that's them turning more of a focus to inflation in that 7-8% level that we've certainly seen over the past couple of months?
Absolutely. I think there's two things there. I think they are confident that inflation will come back to target in time, but I think they're very aware that they need to act now. They need to demonstrate that they are concerned about the level of inflation and demonstrate that they are willing to tackle that. However, I don't think there was too much concern. They indicated that much of the inflation pressures were coming from supply chain bottlenecks, so this theme that COVID is still playing havoc with global supply chains. But the real confidence was the consumer's in a good place, and that demand can be tempered just a little bit without pushing the economy into any difficult spots.
And quite interesting reactions in asset markets overnight as well, if we look at US equities and the bond market as well.
Absolutely. I think the comments from Chinese officials yesterday morning were particularly strong.
Yeah.
I think that level of detail with regards to ensuring no spillovers from the repricing in the domestic real estate sector, offering to provide more transparency for those companies who list in the United States on the exchanges there, and also an indication that this regulatory curb, which has been ongoing for about 12 months on the domestic real estate, on the domestic tech sector in China, that's coming to an end. Bundling all these constructive messages up into a single news release was taken really well by Chinese and Asian equities.
And I suppose it's an interesting dynamic, isn't it? We see the Fed move for the first time in 4 years, effectively, from an interest rate perspective. We see Chinese policymakers reverting on a policy that response has probably been there for about 18 months, 24 months in terms of wanting to reorient the economy, and two messages really being supportive yesterday in terms of equity asset prices.
Yep, and I think the interesting thing was a broad handover from China effectively indicating they're stopping tightening to the Fed, who with confidence indicated they're beginning tightening. So it's this handover, this synchronized handover, even if it wasn't meant that way, I think indicates that global growth momentum can actually continue.
Yeah, and I suppose that handover is quite interesting when we look at today's events, when we think about here in the UK, the Bank of England wanting to potentially move for the third time in terms of interest rates.
Yep, so I mean, we should remind ourselves that the Bank of England are ahead of the game in hiking interest rates. This will probably be the third interest rate hike in the cycle. So we can expect 0.25 percentage points increase in the base rate today, taking that up to about 0.75 percentage points. However, the messaging from the bank might be a little bit more cautious this time. Despite us having the same inflation level as in the US, the composition of that is more of a headwind for households, particularly on energy prices. And we also have the national insurance increase coming next month.
And I suppose it's timely that these things are being discussed, because we've got the budget statement coming from the Chancellor, maybe some hope that he might do something or be less forthcoming with his tightening.
I think that's increasingly likely. I think the level of headwinds that the UK consumer faces has increased so much just this year that we may see a little bit of a pullback from Treasury officials next week, and that the Bank of England may be just a bit more sympathetic in their guidance the rest of the year regarding what's appropriate.
Super. Thanks, Kevin, and many thanks for joining us this morning. Just in terms of looking forward, we'll have the podcast tomorrow coming out, and we'll definitely be focusing in the UK, so we'll delve into what we hear from the MPC today, and also some of those thoughts around future policy direction. Thanks for joining us today, and we look forward to speaking to you again tomorrow.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.